What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is likely going to be a very volatile day for both Tesla and SPY because we have millions of options expiring at the exact same time. Some of the highest amounts of option expirations we've seen for the entire year and for the past few months. Now, before I break anything down about this, before I get into any more details about tomorrow, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just a week, so check it out before they run out. With that out of the way, let's get on with the video. So when it comes to Tesla, guys, I want to break down something very important. Tesla did close down about 1.25%, and we did actually see a bit of a fake out right over here. Tesla came down. It actually broke below the support right here on this 125. Then we quickly rebounded and actually bounced off the 50 EMA on the hourly charts, and we closed kind of red. It wasn't extremely red, but pretty red so far. Now, one thing that's worth noting is the fact that there is a potential or possible head and shoulders like formation, and we could actually start to see Tesla come down. But I do want to note, before this thing comes down, tomorrow we have very high amounts of options expiring, and that will affect where Tesla ends up moving. So to start this off, I want to talk about today. What happened today that I'm going to break down tomorrow. Today, for the markets, we ended up gapping down on some bad data. I don't want to throw too much information at you in this video. I am recording this kind of late, by the way, because I had very important errands that came at the last minute, and I wasn't able to record anything in the very beginning. I was actually away for the entire day, but I'm still here. I'm still committed. So please do not worry. Starting tomorrow, everything will be back to normal, the same upload times and etc. But let's now talk about this. Jobless claims data came out. There were less jobless claims than expected, meaning the stock market did not like the fact that the jobs market is still relatively strong. Now, this hints at the fact that we may see the Fed be even more hawkish, and that's despite all the layoff pieces of news coming out from like Microsoft and other companies. There still is lots of work to be done. I mentioned to you guys yesterday that we're going to see Brainerd speaking, and that is what ended up happening today. Brainerd ended up talking, and she mentioned the same thing I just said. The Fed has lots of work to be done. They're not giving up. They're not necessarily calling it quits. They're not going to pivot anytime soon. At least there's no plan for them to do it. And there is likely going to be another increase in the federal funds rate hike. It's near 100% probability it's going to come. And we just need to figure out whether it's 25 basis points or 50. Either are possible, but 25 seems a lot more likely as of right now. The Fed is still very determined to keep doing what they're doing. And I do believe some of her words did slow the market down just a little bit, but most of what she said was kind of like a repeat of yesterday. And she wasn't as hawkish in a sense. And that's how she notoriously, is when these days come. What else is worth noting is we have the debt ceiling limit. There were not really any major like headlines just yet. I do believe that there are going to be a lot more going into like next week. And I do think next week is going to be even more volatile because there will be lots of fear induced by the media. I'm warning everyone right now about the debt ceiling, the crisis, and this and that. But remember, the debt ceiling limit is here. Congress has to negotiate. And if the longer they take, the more stress this leads to in the financial markets, the credit markets too. That in turn could lead to yields going up. Not the best thing for the stock market. Now, as far as earnings went, most banks actually, I'll start with this. Most banks did okay today. It wasn't necessarily too bad or too great, but then we also had P&G, which beat, and Netflix missed on earnings per share, but they blew away all expectations of Wall Street by adding 7.66 million paid subscribers during the fourth quarter. Wall Street expected 4.57 million, so they got almost twice what Wall Street expected, at least according to reports. And that in turn is likely going to cause this thing to push up and maybe even squeeze relatively soon, at least to some degree. Now, this is leading to some positive outlook for earnings as of right now, but you do have to remember they missed on earnings per share, and we are going to likely see more misses going forward. Now, for tomorrow, it's going to be a very interesting day. I say this because when you look at the options chain for SPY, you will notice, okay, look at today, for example. Look at today. We had 7,000 calls in the money, 231,000 out the money, 99,000 puts in the money, 88,000 puts out of the money. That's a typical day in the stock market. But look at tomorrow, right here. Look at tomorrow. We have way more. We have like 10 times, 20 times more options expiring at the same time tomorrow. 283,000 calls in the money, 1.7 million out the money, 500,000 puts in the money, almost 3 million puts out the money. Max Payne's at 390 for SPY. So if I'm a market maker, I'm incentivized to bring SPY to 390 to close us right there, which means we could get the green close. But for the institutions out there that are fighting at the same time, we do have almost 3 million puts out the money, and there's a chance they might try to come in hard and they're going to try to fight to bring SPY down. So I can't predict this exactly right. Nobody could be 100% perfect, but I want to note many institutions are going to try to bring SPY down tomorrow. They're going to try to fight to push this thing down to like 384, 386, 385, and etc. But then the market makers and other institutions, many of them who have calls and many of them that have that are looking at Max Payne, they're going to try to push the market up. It's going to be a battle. That's why it's going to be very volatile. Okay? There's going to be a very big amount of imbalances between the orders, leading to lots of volatility. The same thing's happening to Tesla. So SPY is going to go up and up 1%, then it's going to come down, it's going to go up, it's going to be crazy. Tesla is also seeing the same thing. We have currently 1.7 million calls out the money with only 200,000 in the money. On the put side, we have 343,000 puts in the money, 1.1 million out the money with max pay at 131. So Tesla's numbers are looking a little bit better than that of SPY's for the bulls, because the first thing to remember is max payne is at 131 for Tesla. Secondly, there are way more puts out the money than there are way more calls out the money than puts out the money. This means that there are more institutions, there are more people out there that are likely going to want Tesla to push up to get those calls in the money. This means even though the market could go either way, even though it is possible for the shorts to attack, right, and try to bring the market down, there is an increased probability Tesla will close a little bit green tomorrow and the market will try to rebound. We did form this inverse head and shoulders like formation on SPY. We did try to push up, but then we started bleeding near the end of the day. But if tomorrow comes, okay, and I just want to note, guys, before I talk about that, I just want to remind you for the next few months, for February to March, I'm very, very bearish for the stock market. I believe we're going to see a big downturn. Okay? So I'm still a big bear, but there could be some rebounds. And there's a little bit more of a higher probability the market's going to try to rebound a little bit tomorrow because of what the option chains are telling us. Even though it is possible for us to just crash at any given moment because of these massive institutions and the shorts and the bears getting stronger, I still believe because of Max Payne and the options expirations and the gap that's still unfilled on SPY, I think we could still see a bit of a rebound. We could try to rebound just a little bit before the next big drop. I believe SPY is going to try tomorrow. It's going to try to fight, and fight is going to be very volatile. And there's going to be a moment where we fill this gap. We see SPY break above 390. We're going to go to 391. We might push to like 392.5 and maybe even see 393 or so. But when you zoom out on the hourly, for example, there is a possible head and shoulders that's actually forming right here, right? We could see this could be the left shoulder, this could be the head, And then we could kind of rebound tomorrow, maybe going into a little bit of next week back to this 393 level to form the right shoulder. And then the market starts tanking really hard. And then we start to see SPY retest the previous supports around that like 380 area, 374, and etc. And then we break below those. That is still very possible. So we could get a small rebound. Maybe the high volatility for tomorrow, the options chain does help us push up just a little bit. Maybe SPY tries to fight for these higher levels just a little bit before next week comes. The debt ceiling news becomes crazy. We get more earnings. And so far, earnings are most likely going to be flat or kind of bad. And then the market collapses and we start to see the big downturn. That is very possible. And that is what I'm trying to eye for tomorrow. We might see a small rebound, just a small one before a big drop. For Tesla, there are more, remember, there are more calls out the money than puts out the money significantly. So more institutions are going to try to push this thing up if they can. There's no guarantee they'll be able to. Remember, because we do have a possible head and shoulders that form for Tesla, but it did actually hold up okay. I do believe Tesla is looking bearish. Net bearish is going to likely come down in the future, going into like the next week, maybe a little bit after that. It also depends on earnings. But like I said, the chart is not looking the best. But I want to note before Tesla crashes, if it is going to come down before the big drop we have tomorrow, and we could see this thing try to rebound a bit first before any potential drops. So if we are set to form kind of like a head and shoulders, we could try to push up back to this 131 area, which is where the possible left shoulder was in the neckline, which tells me we could get a small rebound to the upside. And if the market starts to drop next week because of the debt ceiling news, because of earnings and etc., then Tesla could come down and start filling this gap. So here are the two possibilities. If you're watching Tesla tomorrow, watch 125. Okay, watch that very carefully, because if Tesla breaks below 125 and we like hold below it for a very decent period of time, then it's very likely we're going to come down to fill this gap into the low 120s. Now today we did break below 125, but that was only for like a few minutes. We quickly got bought right back up. Tesla pushed from 124 all the way back up to 128. It was kind of like a fake out move as well. So be very careful with those. It was not a very strong trend down below 125. It was just a quick touch to the 124, then a big bounce after that. So I'm just trying to let you know, if you're watching this thing, we need to see a clean break below 125. It needs to hold that. And if it does end up doing that, then we could fill the gap. Be prepared for that. Now, I don't think that's going to happen, or at least I hope that doesn't happen. The options chain is suggesting the bulls are going to try to push Tesla up in the market up just a little bit during a potential rebound, a small one. So Tesla tomorrow, it might try to push for 130, maybe go all the way up to about 132. That could end up happening. Then we kind of fail there, and we kind of trade sideways throughout the day, and we kind of shop between 127-ish to about 130, and we might close very close to 131, because right now the market makers are incentivized to close Tesla at max pain, which is at $131.67. So this means it's a little bit more likely. Okay, I'm not guaranteeing anything, but I'm saying in terms of probabilities, it's a little bit more likely for Tesla to close green and above 130, around 131, and maybe the market tries to rebound just a little bit. I showed you guys the possible head and shoulders forming on the smaller time frames on SPY. Right here, we have a possible head and shoulders that could be forming, the left shoulder, the head, the right shoulder, which is yet to come before we start to come down. That's one possibility. On NASDAQ, what I mentioned to you guys in my previous videos was we have a potential, a very crystal clear head and shoulders forming. We had the left shoulder, the head, now the right shoulder is forming. And you can see NASDAQ came down pretty hard. NASDAQ also has this gap. I think NASDAQ might try to go for the gap fill, might push up a little bit temporarily before this thing continues to plummet going into the next couple of weeks. This tells me Tesla will likely see some downside, might get dragged down. Earnings will matter big time, but I just want to note there are some bearish signals. I'm not going to go into full details about other things, guys. I just want to make this very clear. So once again, once again, in order for this to fill the gap, we need a clean break below 125. Do I think that's going to happen tomorrow? I think it's unlikely based off the options chain. It looks more likely like the institutions are going to push Tesla up. The market might push up just a little bit, and we might get a small rebound. Tesla might fight for 130 and maybe close around 131. That's what the options chain is telling us. It does not guarantee anything, but like I said, it's a little bit more likely. We're most likely going to see something like that unless something else happens. But that's what I have for this video. Please watch your support and resistance lines very carefully. I am predicting a slight green day for Tesla, a close around 130 to 131. I'm not promising it, but that's what I believe is likely to happen. Despite that, even if we do close above here, even if we hold up going into earnings, I do believe that Tesla is going to get dragged down, start filling these gaps. It is going to likely start to come down in the future, going into like February and March and etc. I just want to make that as clear as possible. Thank you for listening, and I do apologize for being late. Like I said before, I had a lot of errands to run today in the morning. They just came up, and I had to take care of a bunch of things, so I was unavailable to record this video earlier. But starting tomorrow, I should be back to normal. Things will be completely fine. And I just wanted to say I really appreciate each and every one of you for watching these videos. You guys are loved. You guys are appreciated. And I will see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright. And peace out.